Hi, I'm Steve Bereen with Prosperion Financial Advisors. Thanks for joining me today. If January has taught us anything, it was that 2013 was an exceptional year for the equity market averages. Falling uncertainty, solid corporate earnings, and a rebounding economy all contributed to rising stock prices and exceptional performance for many portfolios. But as we've seen so far this year, 2014 could be more difficult. With that in mind, I think it's a good time to return to basic investing principles, 5 of which I'm going to discuss today. The first is to have a balanced approach and periodically rebalance your portfolio. Take a look at this chart from our partners at JP Morgan. It illustrates the performance of various asset classes over the past 10 years. Now, if we could just know which colorful chart is going to be at the top this year, investing would be easy. The problem is we don't have any idea. As I like to say, my crystal ball is broken. A wise investment approach is to build a balanced portfolio to match your goals and objectives, periodically review and rebalance your portfolio to meet those needs. That brings me to principle number 2, invest for income, not yield. We believe the only reason why people invest is for income. Now, typically this is income today, such as during retirement, or income in the future, such as saving for retirement. Furthermore, this income must grow at a rate higher than the inflation rate to avoid getting poor slowly, which is the effect of losing purchasing power. We believe a wise strategy is to invest in great companies that pay investors in the form of dividends, and those dividends grow systematically and consistently. This growing income is a strategy we call growth of dividends. Principle number 3 is to diversify in our global economy. Our economy is global, so it only makes sense to be invested with a global perspective. We think there are really only 2 ways to invest globally, in global markets or global companies. With global markets, you have to pick those investments that are far off places or in markets that are constantly changing rules and regulations, many that are not nearly as clear as the United States. Or you can invest in great companies that are based here in the US but sell their products around the world. Personally, I think the latter is a wise strategy. Principle number 4 is that logic needs to trump emotion. As depicted on this chart, the consumer confidence and stock market, when consumer confidence is low, it usually signals a good buying opportunity for investors. It's a great opportunity to buy great companies when they're on sale. Likewise, it's odd when investors are happy, prices are high and rising. This is akin to going to the grocery store, buying 3 cans of tuna for $10 this week, next week hoping prices will rise so you can only buy 2 cans for the same $10. Think about that. The best time to buy something is when it's on sale. Here, another chart illustrates how emotion can ruin a return. For 26 out of the last 34 years, the S&P has finished with a positive return despite being down during the year. Had investors sold and panicked out, they may have missed those gains realized by those who stayed invested. Our last principle worth considering is to follow the cash. Look at the amount of cash that's on the sidelines. As JP Morgan measures, the total amount of cash in American households is over $10.7 trillion. Well, with over 300 million men, women, and children in America, that's over $32,000 per person, earning essentially 0 interest. This cash is quickly losing purchasing power due to inflation. At some point in time, that cash is going to find a better investment as confidence returns. America is awash in liquidity. That's not the problem. The problem is confidence, and I believe it'll return. So in conclusion, we urge clients to make wise choices with their money. Turn off the volume of the media. It's noisy. We encourage you to be logical, to be wise, to be diversified. If you know someone who doesn't currently have an advisor and is considering finding one, let us know. We can help investors avoid making common mistakes that inadvertently push people in and out of the markets, and we'll also help them to understand global perspective. We appreciate having an opportunity to have a conversation with you about these principles. We're grateful to serve as your advisor. I'm Steve Breen with Prosperion Financial Advisors. Thank you for watching today.